Good morning, good morning, good morning. How are you this morning? Beautiful, beautiful. Lovely. You guys like classical music? I love it. Anyways, nice to have you with me this morning. Thanks for joining. We're going to take a look at the markets today. We're going to look at gold. We're going to look at silver. I hope you guys had a chance to watch the CFTC data analysis that I did for you guys over the weekend. Did a nice video there for you. And breaking down all the latest positions of the institutions. So hopefully that gave you a little bit of insight on what we should be expecting from these markets. So today I just wanted to follow up on that and go through what I am seeing on the major currency pairs, as well as gold and silver. And maybe we'll even throw in Bitcoin at the end. All right. So that's what we're going to be focusing on today. So again, welcome. Thanks for joining me. Just giving everybody a chance to join into the live session. And then we will get started. All right. So what are we looking at? Well, we're looking at the chart of gold. And as you can see, I mean, it's still there. It's still up there, right? Big rally. We had 1 month of basing, 2 months of basing, 3 months of basing, and now we have the candle being created. Now, one thing I will point out that is, if you take a look at the RSI, it is way up there, right? Over 80. And, you know, we know that in the past, when price gets up there, the buying power gets to be too extreme, it has to pull back. And RSI is very useful in seeing that buying pressure. And one thing that we've been learning is that when examining the RSI on the weekly time frame, it is a really good indication of when the banks are maxing out on their positions. So we've seen this, you know, just the other day we were looking at the weekly time frame, and we were looking at when RSI was maxing out. And it coincided with positions getting very aggressive. So, you know, let's show you an example. You know, I go to gold here, and let's look at RSI here at 80. You see down here, right here, and that is March, April, May of 2024. Okay. March, April, May of 2024. So we go to 2024, March, April, May, 300,000. Yeah. You look, see the coloration of the cell? Aggressive red, right? Not super aggressive, but still aggressive, right? And we look back here. Again, in the 80s. And this was around November 24. Okay, November 24, and take a look. We'll scroll through November 24 and look, October, November, 366,000. That was way up there. Okay. So we're seeing this being a very good indication of when the banks are becoming very aggressive with their positioning. And so, you know, when we see the RSI decline, it's from the profit taking on those positions. So it's something that's really become useful because another thing that I wanted to point out to you guys is that we always talk about here at the school about what time frame you need to be focused on. Because if you don't know what time frame you should be focused on, then how are you going to know what to expect, right? And this is the problem with a lot of traders that I see. They do their analysis on all these different time frames, but then they don't know what time frame they should be looking at. Now, it's easy after the fact, and this is how a lot of traders get tricked, is because after price plays out, it's easy to see what trend line it contacted, what support and resistance did it hit? It's very easy after the fact, but it's when it's live, do you know what chart you should be looking at? And so that's one of the things that we do here with the Sherlock analysis process. We take a look at each individual time frame to discover what each individual time frame is responsible for, what it's helping to facilitate, because everything that happens on the lower time frame helps to facilitate something that's happening on the higher time frame. And so if you know what's happening on the higher time frames, then you can look at the lower time frames and see what part that time frame is playing. And so why is this important? Why do I even mention it? Well, I mention it because when we look at the RSI is a very good indication of something being overbought or oversold. It is, if you know what time frame to be looking at. So if we have determined that the daily chart, for instance, is the chart that is in play, the one that we should be focusing on, if we took a short position, for instance, from a supply zone, when price drops and it becomes, it gets into oversold territory, there's going to be a pullback, okay? And if you're riding a trade based on that time frame's momentum, this is why the risk to riches challenge trades are so powerful, because we ride that momentum. When we get the signal to when it's in overbought or oversold territory, depending on if we go long or short. And our targets are reached as it enters into that overbought or oversold territory. So it's quite a unique way of using it. Again, it all comes down to knowing what time frame to be focusing your attention on. So, I mean, when we look at the higher time frames here, it's overbought and it needs to drop. Okay, this is why we place the arrow here, is because all indications on this chart are telling us that this needs to drop. And when we look at positioning here by the institutions, we can see that they've reached a maximum size quite a few times, or close to a maximum size quite a few times. Late 2024 they did it. Then they did it at the beginning of the year. Then they took profits, always followed by taking profits. Then they did it March and April, followed by taking profits. Significant time of taking profits all throughout early spring and early summer. And then they acquired some positions from 270 to 311. And this was to cause one final push up here in price. Okay, you can see it more prevalent on the lower time frames. And now what we can see is that they've been taking profits on those long positions, reducing them from 311, 281, 275 now. Okay, look at shorts. As you can see, the coloration of the cells are blue, meaning that they're not even focused on shorts at this time. Okay, it's profit taking. So when you ask yourself, why is price moving in such a strange way? It's just holding this for quite some time. Well, when you look at the higher time frames, you can see this situation happening with the peaks, right here, like this. This is what you see. You see a rally, a drop, rally, drop, rally, drop, rally, drop, rally, drop. Why do you think they're maintaining this level up here? Think about it. If you're if you're part of a big banking cartel, and your job is to acquire positions and make big money for the banks that you work for, if you acquired a massive long position here and here and here and here, where do you want to take profits on your position? You want to take profits on your positions here, 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 right? That's how you make money. You buy low and you're selling high. So remember to offload the positions that you acquired here, 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 here. You need to pass on long positions up at the highs, right? And it's pretty remarkable how they do that, because they realize that retail traders are looking at indicators, and they realize that these indications are showing that You know, price is way in the extremes. You're looking at a monthly chart, you see RSI overbought. So who in their right mind would buy gold when it's overbought already? Well, retail traders, they don't really use logic when they are trading. Unfortunately, they use mostly emotion. And the fact that they are triggered emotionally is a great asset to the banking cartel. So when I'm trading, the one thing I'm always reminding myself of is to always be logical about the situation, understand what my analysis is revealing to me, and to stick with that conclusion no matter what circumstances may come up. I don't care what the news is. I don't care what Powell has to say. If he's saying rates are going to be cut, not, I don't care at all about what he has to say. The only time I take those things into consideration is to point out the fact how interesting it is that it's mentioned that there might be some rate cuts in September, and lo and behold, that's looked at as negative for the dollar, positive for the euro, positive for gold. Doesn't that make people want to buy or go long those assets? Right. And this is exactly what the banks are trying to offload. Okay. So there's a whole process that's going on right now with gold offloading long positions. I believe all this sideways action is eventually going to be followed through with a big move to the downside. Okay, been saying this for a long time. I'm going to continue to say it. I don't see any other way that this could be playing out. Could they do something completely different? Sure, anything's possible. But the chances of that, something different coming into play, are probably between 5 and 10%. Okay, so when you're looking at the odds of things happening, which is what we do as traders, because you never know 100% what's going to happen, you have to look at the odds. The odds of them changing what they're about to do is between 5 and 10%. And what would they have to do? Well, they'd have to start acquiring massive long position again in gold, even though they've come close to their maximum size. They have to start acquiring a long position in the euro, even though they're just at maximum size. So what are they going to do? How much more are they going to acquire? Based on historical figures, they're nearing their maximum position. Could they surpass it? Yeah, but usually not by much, right? So the chances of that are not very good, 5 to 10%. So with that being said, it's much more likely that we're going to be seeing a drop in price. All right. Hello, everybody. Nice to have you all with me. Nice group of you guys. Let's see who's with us today. Just curious. We've got Beretta FX, Trung, thank you, sir, for joining. John, Hoshi, do you mind touching on S&P 500? Morning, sir. Greetings from Nigeria, the giant of Africa. Beautiful. Matthew, Shen, nice to see you guys. Yeah, so this is what I'm seeing for gold. Would I short gold? No, I wouldn't short gold because there is no opportunity to short gold right now. This daily demand zone needs to be removed, and by the time it's removed, you know, it depends on the setup. If there's a good setup, that I would trade it definitely, but right now there's no good setup. Okay, let's look at silver. What's happening with silver? Well, remember on the weekly time frame, we had this institutional supply zone that we located right here, and I wrote expecting a move to the downside from here, and this is exactly what took place. And then I wrote right over here at the demand zone, watch for a move up, price contacted demand, and then there's a move up. I mean, you can't get more accurate than this. When you know how the banks control price and you know their buying and selling zones, and you know what time frame to be watching for, you can pinpoint exact moves just like this. Move down, move up. And so the latest move that took place is on here on the 4-hour time frame. If you take a look here, you can see that I had a very important zone right here. Okay, was contacted, dropped price, came into an important demand zone, rallied up, and now this area has been removed. Okay, so this tells me that the banks are interested in short-term buying here on silver. Does that mean price is going to come down here and then use that zone to propel price higher? It's a possibility. It's a possibility. But remember what's happening with gold. Profit taking on long positions. So I suspect, okay, over time, okay, we have supply here, supply on the weekly. I suspect over time we are likely going to see a move to the downside, okay? So I'm not interested in buying this one just yet, because when the euro is going to drop and gold's going to drop, silver is likely going to follow suit, okay? So would I have been a buyer here if I had seen different, a potential different outcome on gold and euro? Yeah, I would have been a buyer here at the weekly demand zone, okay? For sure, I would have been a buyer here. So, but I'm not seeing that. And also, when the weekly area was bought here, okay, when the weekly demand zone was contacted here, I was watching for signs of the banks acquiring a position on the lower time frame, and it wasn't happening. And so that told me that, yes, we were coming into an institutional demand area, but that demand zone was likely not going to be used to facilitate a longer term move to the upside. And that's an important thing to spot. Otherwise, you'd see price coming into the zone. You'd think, oh, maybe this is going to be an area where we're going to see price shoot up to the moon from here. And we're able to determine if that's likely going to happen or not. It didn't happen here. Okay, so that's why we're coming to the conclusion that we're likely not going to see a sustained move to the upside, which is totally in line with what we're seeing with gold. Okay, Aussie, Aussie moves in line with gold as well. Not all the time, but most of the time, to a certain extent. If you're following us on our Telegram channel, you'd know that we had this area of supply drawn out. I had a circle, red circle drawn here, green circle here with the red arrow down, signifying that when this area gets contacted, we were expecting a move to the downside. And take a look at that. Look how accurate that is, right? Let me just zoom in here so you can see just how accurate that was, okay? Just by a matter of pips, price came into that area of supply and then dropped. I know some members actually took a trade short off of that area, and it worked out extremely well for them. So, overall, we know that the banks have been focusing on a short position here. But the bottom line is price has come into an institutional area of selling. And even though it is taking time, we do suspect over time price is going to be dropping, just like we suspect with gold and the euro, okay? Over time, drop in price. Let's look at the euro now. Here we are. Beautiful. So on the euro, we have price rallying up, okay? On the higher time frame, it has not contacted any type of institutional selling area. Okay, selling area was here, selling area was here. Okay, lots of imbalances, but if you don't know how to determine an institutional supply zone from an imbalance, you're going to have a lot of supply zones drawn on your chart, and they're not going to be correct. So price is not contacting an institutional supply zone at this point, but we are reaching near maximum size on long positions, which, we know eventually they're going to have to close out those positions, and it's going to cause a move to the downside. Now, if we take a look here, you see what is being formed here. Same thing. Rally, drop, all in the same area. Okay. We see this over and over again. when a top is being created and price is just about to drop. And the reason why we see this is because that's an indication that buying is over and profit taking is starting to happen. And look, we've drawn out these green clouds. This is showing us the aggressive buying from the banks. Okay, this is why we draw the green clouds, is to physically represent the aggressive buying from the institutions. And now we're reaching near max size, so they're going to have to take profits. And this is why we have our red arrows drawn in here, because this is the direction that we are expecting price to move in. So, you know, it's a good opportunity to get into a position, at least I think so. It's risky. It's a trade not based on major institutional supply coming into play, but live, real-time profit taking on long positions that is expected from price. And so, interesting thing is when we take a look at the 4-hour chart, we had an event last week which was quite interesting because this event was sparked by this idea that there could be some interest rate cuts in September. So that's perceived as weak for the dollar. And it's interesting because you think about it. The big banking cartel is trying to offload a long position, okay? And so if you don't think the big banking cartel has influence with the Fed, then that's fine. But what I've seen over the years is how there seems to be an interesting correlation between what the banks need to facilitate and how the Fed comes out with something that triggers an emotional response that helps to facilitate what the banks are needing to get done as per their agenda. And this agenda is the banks need to offload long positions. So they need to find a way to get retail traders to buy the euro. And this is what we had. Okay, rates are going to get cut. It's come across as weak for the dollar, strong for the euro. Everybody buys. And what did I do on Friday? You know, in our live level 3 session, when price was up here, I shorted the euro. Okay. I got back in because I was already in short. I closed my position and now I got in short again with the expectation that price is going to drop. Now, the first expectation that I had drawn here is price is going to go from here towards this area. And take a look. That's exactly what's already happened. Okay. It's already gotten down to that area. But I'm holding for a longer term hold, because I suspect that over time we're going to see price drop even lower. Okay, much lower. But in order for that to take place, the reason why I showed this image here is because there's an X there, meaning this zone has to be removed. Once that zone is removed, then price could be allowed to drop down to the next area of buying, where from there, you know, we'll likely see RSI at oversold territory, which will then require a move to the upside to relieve that oversold situation, and then eventually we'll see a continued move to the downside. Okay, so this is what I'm seeing on the euro, and I'm sticking to it, and I'm putting myself out there telling you exactly what I'm seeing here, because when price does eventually play out, I want you guys to see what is taking place, and I want you guys to understand why it's taking place. Okay, I don't want you to listen to the news and hear their explanations, because they'll explain to you when the euro rallied that it was because rate cuts. But what is their explanation now when we see a drop in price? They're going to come up with some explanation, because they're always going to try to explain things in such a way that it makes sense, but will never, ever allow you to understand what is really taking place. Okay. In all my years trading, this is what I've seen over and over again. And it's quite ridiculous, because when you know what's really taking place in the markets and why it's taking place, and then you turn on the news and you listen to their explanations, you're thinking to yourself, that has nothing to do with why price is moving the way that it is. So I want you to learn that and really take notice of that, okay? Pound, same thing. I pointed out this institutional selling area. Price rallied right into an institutional selling area. So when price is rallying up and we have located this selling area previously, don't be surprised that it drops exactly from their selling area, because the banks control the markets and their buying and selling zones are what pushes price. Okay. And so I point out these zones to you before they are reacted from, so that you can see that we can locate these buying and selling zones before price even gets into them. And then when price gets into them, we can show you that price is going to react from them. It's quite magical. Kiwi, there's not much going on here. We contacted some supply. It's going to move in the same direction as the Aussie. USCAD. Here's another tricky one, because we're getting a push to the upside. We previously had a long signal here, which played out to perfection. No major demand zones being contacted, yet we know pressures to the upside because of what we're seeing with the dollar. Okay, and the pressure from the some demand zones that that has been contacted. We can see that on the U.S. Swiss, okay, demand, and on the DXY we have demand as well. Okay, DXY, on the other hand, rallied up into supply that was already contacted before, and that caused the reversal to the downside right as news was coming out. It was just so perfectly timed, it's crazy. So yes, do I suspect pressure to the upside? Yes, that's what we've been getting. But, very difficult to time this one. We got the move that was well timed, and this was a perfect example of what I was telling you about. When you know what time frame to be looking for, you can spot the signals. Here was our long signal here, RSI, okay? And you see how when it got to overbought territory, we got the drop, okay? And this is the move that we captured, was from here to here. Very easy move, okay? When you know what time frame to be watching. When you don't know, it's not so easy. US Swiss, so buying pressure came in. We had a long signal down there as well. And yeah, I went into detail in the latest Aruja report with respect to what we're watching for here exactly and why. So I won't go into that detail, but US dollar, Japanese yen, same situation, pressure to the upside, profit taking as well. Bitcoin, interesting. Interesting. Take a look at what just happened. Okay. Okay. Right here. Okay. It just happened. The zone has been contacted. This is an institutional buying zone. Price has come into this institutional buying zone. Now the buying pressure is on. Okay. How long will the buying pressure last for? Well, you got to look at the lower time frames. On the daily time frame, we have price coming down. We also had a zone here as well on the daily time frame. So you see the buying already coming in. See how price came down, and now we're already starting to see buying. On the lower time frame, we had a big demand zone removed, but it didn't produce a good supply area, which is too bad, because if it did, that'd be the area that I'd be watching for to see if selling is going to come in or if buying is going to come in. One thing I can tell you is that you look at the RSI right now, as price enters into the zone, it's weak. Okay. So I'll be watching this for strength and then long signal somewhere around here. Okay. But look at the buying coming in. That's institutional buying there, folks. Okay. Big money is coming into the markets right now, buying up Bitcoin from the institutional buying zone. Very good looking buying zone. And according to my analysis, we have a system of locating targets my target for Bitcoin now is 130. Okay. 130 is where I suspect price is going to go. Now, obviously, we need to see continued buying on the lower time frames to give us the signal. But once that's in play, then we'll know what time frame to be looking at. We'll watch the buying coming into play. We'll ride the wave to the upside, and then that's it. We'll take our profits at those highs and move along. But this is looking pretty good. So keep an eye on this one, folks. Okay. And who else do we have with us today? Jatin, Dre, nice. Welcome, guys. I hope you guys liked today's episode. We covered quite a lot. I hope it was helpful and useful to you. And if you got something out of it, please hit the like button. Help support our channel. You know, we should be getting a lot more views than we're actually getting. It's kind of crazy, but this is how it is. I'll take a look here. We got institutional supply that came in here. Remember the break of this ascending trend line? Created institutional supply, price came up, and boom, contacted it. Just like magic. Anyways, hit the like, subscribe, hit the notification bell if you want to get notified next time we do a live session. And then we can hand deliver you this bespoke analysis right to you, okay? Anyways, you take care. It's always a pleasure. Help support our channel, please. We'd like to get the word out to more people, and we can only do that with your help. Okay? Have a great day. Enjoy the rest of your morning, and hopefully we'll see you in the Telegram channel. Come and join us. whiteoakfx.com. The link is at the bottom of the page. All right? You take care, everybody. Have a good one.